Tax day. It is Tuesday, April 18th. Yes, that is tomorrow. 2 Wants to Know answers these questions. What happens if you don't file on time? And how do IRS make those payment plans work? Here's what happens if you don't file.
If you don't file your return, first of all, any unpaid taxes you're going to pay interest on. There's 2 separate types of penalties for failure to file. So it's a failure to file penalty, which goes up to 25% of the unpaid tax, as well as a late payment of the tax. So you basically have a lot of money that you're going to be paying on top of the tax.
Okay, that all just sounds like a whole bunch of money and a big old headache. So let's go the route of filing a return. If you do happen to owe money, the IRS has payment plans. They have short-term plans, 180 days. They've got long-term plans. And the IRS webpage answers about 16 of the most frequently asked questions. But one thing not in these questions, how the IRS determines how much you pay every month.
They're going to go through your income and your assets to determine what a reasonable payment is. They're not going to take every single dollar that's coming in.
That's nice to know, isn't it? Midnight, that's the deadline for all electronic filing. If you insist on a paper return, the post office does not stay open late on tax day.